All right. So this is just my weekly recap. So let's just see what happened. So NZD, we'll start off. So all the pink ones are basically the ones that like happened, played out this week, and yeah, so from like the ending of last week played out this week, and then some trades I took this week. So NZD JPY. So on the weekly, the previous weekly, this week closed like that. So NZD JPY, pretty sure it was a trade from the week before because we wouldn't be trading when it's like this. Um, so let's see, Thursday, Tuesday, Wednesday, Thursday. Yeah. So this was last week's trade. So we already went over this. It was just playing out and I couldn't trade it this week, so I just kind of left it. So some things that I noticed on here is this whole schematic violation where it taps into 0.75 and then hits 0.25 and then could reverse. So that seems to happen more when like if it hits here and then gets up to here. That seems to happen more if you don't let the daily have a proper pullback. So every time that we've done this, we've like gone on to like let the daily at least have a 1 to 2 candle pullback. And then when it has a 1 to 2 candle pullback, then it's primed to go ahead and do its thing. So we just weren't waiting for the daily to at least have a 1 to 2 candle pullback. Because if it doesn't do that, what happens is the candle like pulls back, taps into 0.75, wicks back up the body here. Sometimes it'll continue to go, but most of the times it'll just fill back up and then it'll come back up. So this is where the 0.25 is. So you enter, right? Like like for example, you enter on the 0.74 on here, it gets up to 0.25 because of how it wicked in, because it didn't actually like get into that area. Like it kind of just like pushed, pulled back, and then it just fills back down. So to do that, I just need to make sure the daily has a proper pullback. If the daily has a proper pullback, at least 1 to 2 candle pullback, then it will overpower the 4 hour schematic violation. Um, but either way, like this was the entry for this last week. So basically, we made sure the daily, like if we go back, I think this daily here popped up yet, but yeah, it had a proper pullback. We had the 4 hour confirmation right here. There wasn't any 3R trades prior to that, so that's another thing. So that's another thing. You got to make sure that there's no other 3R trades to take profit before this in this week, right? So for example, like if we were to go back here, we got the confirmation in our direction on the 4 hour. You want to make sure the 30 minutes in trend. The 30 minute at the time was in trend there. You want to make sure the 15 minute. So the 15 minutes not in trend. Once it breaks, okay, it broke there. But the 15 minutes not in trend. So this whole entire push on here never gave us a move. Okay, it's still 50 minutes still bullish. There is an accumulation right here, basically. Retest engulfing right there at 11 p.m. So this is like London. Um, So then we would go here. Since this is all internal, you can't put your stops below the internal. You have to go below the actual lower high and higher low. So right here, do the wick at plus 5 pips, so 47. So that's basically what we'd be looking at, but I don't think anything worked out properly there. Okay. So yeah, that would have failed. This was also at London, so I wouldn't have even taken that. Well, depends. Really depends. If I was awake, then I would take it, but if I'm not awake, then I'm not gonna take it. Let's make sure this whole entire thing, yeah, this whole entire thing was in trend. The 15 minute was in trend. One, two, three, four. Retest and an engulfing right there. So that was a valid entry. Price just didn't want to go our way. At this time, let's see, this was on Wednesday. So we need to see if the Tuesday had closed as like a daily pullback candle or anything like that, right? So Monday had a pullback and Tuesday had a pullback. So it was good. Like it had a pullback. It was ready to go. Like we had at least one candle pullback on here. The 4 hour rejected the kill zone on here. We have the rejection confirmation right there. Um, I guess one thing to notice is that when we get the rejection confirmation, we need to mark up the periods that we are going to be trading. So like we got it there, it's only a 4 hour period, right? So we have to make sure that we get the entry within this period on here because then if the 4 hour closes against us, we're not interested in it, right? So starting here to the next 4 hour, right? So start in because we got it there. So we'd be looking from 7 p.m. because this wouldn't have closed yet to set. So this was 3 a.m. This is when it's open to 7 p.m. So 3 a.m. to 7 p.m. This was right outside of that. Like we have to get an entry within this box on here because the next 4 hour comes up and that's like this 4 hour closes there. So we need to remember that if we get into a trade, we need to make sure that it's within the time session because it's not so much about what you do and how you do it. It's like the timing is very important, right? So we got a rejection confirmation here with the bullish candle. We need to wait like we only have this period within here. So we got the bullish rejection candle. Let's go back. We got the bullish rejection candle. So we know within this next period on here, we're looking for that accumulation break retest going into this period, his next 4 hour period here, right? So go into that. We get the break, and we didn't get the retest until it lands outside. But then you're looking from 7 p.m. to 11. So 7 p.m. to 11 closed as a bearish candle. 7 p.m. to 11 closed as a bearish candle. So this is not a rejection confirmation. So we can't be interested in that. So that's why this situation here failed because we didn't get like basically the timing was wrong. Okay. So versus here, like if we go to the 4 hour, like we're getting 4 hour confirmations. I'm sleeping. I'm not gonna be looking. This one from 7 p.m. here, it's on Wednesday. So on a weekday, like Monday, Tuesday, Wednesday, you can do it starting from 7 p.m. But on a weekend, you need to start from 11 p.m. because the day doesn't start until 11 p.m. Starts. So I think I have an indicator that might show that. Um, so Sunday, Monday, like look, see, from Sunday 3 p.m. to 11 p.m. That's like the no trade zone because this is a continuation from last week, right? So you want to start on Monday and then you want to go, or you can start on, see, like Monday starts at 11 p.m., right? So after 11 p.m., that's when you can be looking to take a trade. Just remember to box off that 4 hour period so you know what's going on. Okay, and yeah, like I said, same thing we did with this trade right here. We got the rejection confirmation. So we haven't had a 3 hour trade in the week yet. So this one was valid as long as we take it within the period. Here we go 3 p.m. not interested. 7 p.m. we would be interested in here. And then just look for everything where my entry's on the 15 minute. So that's basically how we did that. Like you can see, we have this little 4 hour period. So starting at 7, it was good. And then we have to go all the way until 11, which is here. So we had entries within there and it was valid because it was within the time period that the 4 hour gave us, right? So that was that. The next one is USD MXN. So weekly previous bias closed bearish, right? So then we're looking for bearish down to this take profit here. The daily at the time had a proper pullback. So it had at least one candle pullback right here. So once it had at least one candle pullback, which was this section right here. We waited for the 4 hour rejection confirmation. So right here. Okay, my bad. Okay. So at the time, wasn't that one we were looking at? We were looking at here. All right. So basically price pulls back. Didn't really quite tapped into here. Like if you zoom and actually draw everything properly lined up, to see that it came very close, but didn't actually do it. So it came there, it missed. So which is why I didn't take this one right here. I wasn't interested in that. At 11 p.m. I don't even think there would have been an entry at that time because I don't think the 30-minute would have been in trend. So let me just check something real quick here. The 30 minutes not in trend until it shifts all the way here. So that's why I knew I wasn't going to be interested in unless it breaks the high there and then, or if it breaks the low here. So I was like, okay, I'll just check back in like morning and see what happens, right? So none of this matters until the 30-minute breaks, right? So when the 30-minute broke right there, because this is a 30-minute high or low, and we only take trades when the 30 minutes in trend. So 30 minutes in trend, you can see on the 4 hour that we had like a rejection confirmation and it closed within the area of interest right here, this kill zone on here. So we closed right in there. So basically what we'd be looking for is when this 4 hour is making its top wick, like what'll happen is it'll do like, make a top wick, shift, and then retest it and break. So this is what's going on. So it makes top wick, shifts, retest the bottom of this previous 4 hour here and then go. So that being said, what it looks like is we got the 4 hour rejection here at 3 to 7, right? So then you would go from this period here, you'd be looking for an entry, right? So within this period on here, so you can see within this box, the 30-minute has shifted, right? And then we have no retest on the 15-minute on here unless it breaks there. But now that it's shifted, um, there was an entry somewhere here. Was it on a 5 minute? Okay, yeah. So we broke. This is within our 4 hour period here. We have one, two, three, 4 wicks. We pull back, retest it. Because it's an exotic, you want to be very careful on the retest. Like if it breaks it, you want to be very careful that it only breaks it by like zero point 0.3 or something. Like something like that's too big. Like it has to be like because of how the pips are measured. Like if it breaks it, it has to be like zero point 0.7, that's fine. But anything like 1.2 or anything that all violates it. So here we had a perfect retest. Price didn't break the neckline, it just kind of wicked into it and then like printed an engulfing. So that's where I entered on there. And you can see also on the 15 minutes, so this would be another neckline. So we wait for price to break it, price retest it, and price gives another engulfing right there. You can see this is would be another neckline right here. So you can do it on the 15 or the 5 minute. You go to the 5 minute. Um, see like if you considered this a neckline right here, and price comes back, price breaks it, this part right here, because it violated this engulfing violated here, we wouldn't be entering on this engulfing right here because we had an engulfing that violated the neckline and it was more like 65 pips. Basically, it tapped into the neckline right here, said nope, and engulfed all of it. So we wouldn't be interested in it after that. So then you would just continue to look as long as the 5 minutes in trend, you can take it on the 5 minute. So there was one, two, three. One, two, three, four. When price came back and retested the neckline right here, it's basically 3 pips. So I wouldn't have been interested in this because with the exotics, like Just the way they move, like you need to be very precise. With a regular pair like NZD-JPY or AED CAD, you can do that, but with the exotics, you don't want to do that. And then it kind of just bled off. I don't know if there was a 1 minute entry somewhere in here. So within that period still, here you can see, boom, 1 minute's in trend, 1 minute breaks, comes back, engulfs right there. This did break the neckline by more than I'd like 12 pips on there, so that wouldn't have been a valid entry. Um, Here, you come back, we retest, and we get a little engulfing right there. So that would have been good. Stops here, and then you do like 5 pips above. Well, since an exotic, you do 50 pips above the lower high. So this is the lower high right here at 74. So then 75, right? So, all right. So yeah, it's rainy here and like temperature change is kind of making my nose really watery. So, okay, yeah. So here, so then you do like 125-ish. Just say like right there. That's the 50 pips. And then yeah, you have another entry right there. And yeah, with these, they bleed out pretty fast. With the higher time frames, they take a little longer. But the 1 minute is very risky because price can very easily blast you. 5 minute is 15 minutes the safest, 5 minutes the next, and then the 1 minutes if you're really just going for it. The next trade was G. Oh, right. Actually, I have another thing to go over with that. So, okay, now that one thing to remember is that if you have an entry within the week, right? So this is the week on here. Okay, so if you have a like the week started on Monday, right? If you have a 3 hour trade during that week, you can't take another one later on, right? So basically what happened was this played out for 3 hour and then it pulled back, right? So I was like, okay, we're pulling back. We can do another like, if we come back to the kill zone, we can do another trade. Right? Like we pull back, and I wasn't interested in this because like it closed at an area of interest, but it didn't close at my area of interest, so I'm not interested in that. And then yeah, we already had this one push on here. So what happens during the week is like price will push from like if it's gonna do it like Monday to like Tuesday, Wednesday-ish, and then it's gonna reverse. So it's gonna then go the other way like that. So if you take a trade down this week, you can't like early week, you can't then on Wednesday try to continue it. If there's no trades early in the week, then you can look after Tuesday and Wednesday for volume to come in, like that midweek switch, and then you can take it up. So if you take it down early week, midweek after Wednesday, you can't take it down again because price will then go the other way, right? Because the daily candle or the weekly candle will start, it'll push up, it'll push down, right? And then it'll push up to make that, and then it will kind of like close depending on where it closes. And then like this would be the wick, and then everything in between that will be the body. But you just got to remember, like after Wednesday, Tuesday, if you have the move early on, like a 3 hour trade, which is this early on the week, you can't take another one during the second half of the week because the pair is now exhausted. Even if you have proper daily pullback, you have the 4 hour pulling back, like this pullback gave a rejection candle, and then when the 30 minute did the engulfing. So as you can see, we're within this period on here of like when I think there would have been one like at 7-ish or something. Um yeah, at 7, right? So basically this period here, because I didn't want to just take it that late at night. Right, so here, the 30 minute at the time was bearish, right? So we'd be looking within this period on here, but we never got a signal or anything within that period. Here, this was an entry at 3 a.m., but like I said, you can't take it once it's already done the move early in the week. So that's why this failed on here. Um, Internal structure stopped out. Didn't take that one just because, like I said, it didn't make sense to take a 4 hour when it's not like tapping into the liquidity zone. This one, the entry came very close to the liquidity zone, which is why I was interested to break neckline. And this was at 3 a.m. So right, like the last candle, you know that closed as this candle on here. So then you can look for it within this candle on here. And it had a daily proper pullback, 4 hour proper pullback, everything. But like I said, once you've done the move once in the week already, you can't then try to double dip in it. That's where all the losses come from. So if you have the move early week after Wednesday, just move the pair to a different category. You're not going to be interested in trading that pair anymore. You need to keep it out of your eyesight. That way you're not tempted to look for setups on there that could possibly cause a loss. Because I was really debating whether or not to take this, but this wouldn't have happened if I knew that, okay, I took the trade once in the week before, put it in the trades for review section instead of like having it in here where you're always looking at it, right? So we need to hide it, keep it out of mind because we need to cultivate our environment so that it's set up that we can win all the time, right? Or we can optimize so we can work best. GU was another one. So Sunday right here after 11 p.m. So like I said, after 11 p.m., you're free to take the trades. So 7 p.m., 11 p.m. started up here. You have this like window on here. So basically what happened is you can see the 4 hours in trend. You can see the daily had a proper pullback right here because we wouldn't have seen this candle yet. So the daily had a proper pullback right here, at least one candle pullback. The daily is also bearish. The 4 hour ended up having pullback to the area of interest. So right here, we tapped into this liquidity zone. So we knew that we're good. And yeah, basically you go to the 30 minute. At the time, the 30 minute is bearish. So you can see all this is bearish. And we go to the 15. 15 is bearish since here. You can see this is all internal, right? So we can't even take anything off of here, even though there was because of all this liquidity in here that's created. So you want it to break and retest right here, basically. I'm gonna move that because it was set up properly. No engulfing there, but on the 5 minute, right there. That's the engulfing right there. Price taps it, retest. So you have 1 wick, 2 wick, 3 wick, 4 wick. Price breaks, price taps it, price engulfs right here. This is like, I think, an equal candle engulfing, like equal pips. So this was 0.7 pips. This was, that doesn't make sense. Okay, 0.8. Yeah, zero point 0.8. So this was equal, so that's why I took it. Wasn't really paying attention to price after I took it because I kind of just like remember that like, okay, we're not using internal liquidity stops, right? Which is the same thing we did on USD MXN at the end, but the USD MXN already had the move once. This didn't have the move once yet, right? So it's still valid, but you have to put your stops below the lower high on here, the actual lower high, and then plus 5 pips. So here, and you go plus 5 pips, which would have been right here. So then kind of like goes heavy into drawdown and then just starts to bleed out like that pretty quick actually. And then yeah, 3R. Once it hits 3R or like yeah, once basically this was 3R right here. Once it hits 3R, it's just cool just to like exit it. But the only reason I would hold it longer is if we are like trying to pass a challenge that we're down a lot. So like these trades on here, um, this was just showing a bad entry of what it would look like if you try to kind of like do what you're not supposed to do. But um, these 4 hour schematics didn't matter because we had that daily pullback. And oh, it's in replay mode, that's why. Okay. But yeah, basically same thing. We just had the range to do the move. Like we didn't have the move early in the week yet, so we're expecting from like Monday, Tuesday, it's going to do that. If it didn't do that from Tuesday, Wednesday, we would expect it to change direction. CAD was another one. I think it played out from this week or last week. What is this, Friday? Yeah, this played out from last week. So basically the exact same thing. Like, yeah, we already did a review of this last week, but the weekly closed like the weekly it closed in our favor for a pro trend. It closed bullish on there. The daily had a proper pullback of at least 1 to 2 candles, right? So it pulled back. That caused the 4 hour to have a proper pullback. So the 4 hour had all of this is the 4 hour high or low, pullback, rejection confirmation, mark out the next 4 hour period, and we look for entry within that 4 hour period. Um, so now let's go over all the trades that like nothing happened on it. So I think USD, HKD, these just ended up like going straight to profit without like telling us. Look at your HKD, like no matter what, when it gets to this level, it will always like bounce. See, it gets here, bounce, bounce, right? Um, yeah, the US dollar and Hong Kong dollar. So don't try to like trade into these because that's what happens. Same thing happens on there. Pretty good to sell off supportive resistance. USDCZK, same thing. We already tapped into profits here or TP, and then we didn't get an entry or anything like that. USD CAD, same thing. Tapped into TP, never got an entry. UK oil, that was just not at an area of interest when we were looking to take the trade, so I was not interested in it. All these other ones we weren't interested. And US oil, yeah, these were the ones we were waiting to actually do things, but it never did. So the daily shifted on here. We never could do anything. Same here, daily shifted, and daily shifted on here. So that's a recap of the week. Basically, the main learnings is there's going to be like when the week starts off, right? So from like Monday, we'll say, yeah, I'm gonna say Monday because it's not going to show us Sunday. This is the one we're looking for, Monday, Monday. But you can kind of see it here, right? This would have been like Friday, so Sunday would have started here basically at 11, and you can take it, and then midweek. So Wednesday is Tuesday, Wednesday, price will then begin to reverse. So same thing here. Like if we go Monday and Monday to Friday, you can see price like kind of starts on Sunday there, right? So price pushes up and then midweek Wednesday, price then reverses. Same thing here. Price starts on Sunday. Price gets to midweek, which will be Tuesday, Wednesday right here, and then price starts to go the other way. So that just knowing how the week works with the 4 hour basically and how everything kind of switches midweek, and then also the 4 hour schematic, how you need the proper daily pullback. So the proper daily pullback was one thing that was like really messing us up. So now we're just being patient, actually waiting for that daily pullback because we know it's going to mess everything up with a lower time frame if we don't actually wait for that daily pullback. So there's that. And then yeah, also making sure that you just draw up that box for the next 4 hours so that you know that within this time, this is when you're looking for it. And then you're not, if you get an engulfing outside of that, you're not going to take because it's going to fail. Because usually the 4 hour time frame printed a candle that's not confirming our direction. So drawing that box out there to identify the areas that you like the time that you can do this in, because time is very important. That's going to make a huge difference. And yeah, I think that's the main things for this week. Just main things, like I said, just wait, waiting for at least, yeah, 4 hour, yeah, and yeah. So if it happens, if you have the week from Sunday to Tuesday, then Wednesday is gonna go the other way. And if nothing happens from Sunday to Tuesday to Wednesday, then later on in the week you can catch it. So for example, if you were like trading here and nothing happened here, then midweek you would know you can then look for an entry. So then price would start going the other way because price will flip around Tuesday to Wednesday. Like the charts will go, like the weekly will basically create top wick and bottom wick, right? So that's the main things we've learned from there. And that's what we're going to carry into the new week. And that's it. That's the breakdown for the week of basically 11th to 16th. Hope that helps. Peace out.